Good morning, everybody. Thank you for joining us today. My name is Laura Bryant. I'm the Business Development Manager here in Southwest Florida for Castle Group. Today, we've got a great webinar on budget and reserves. We've got a lot of good questions that came in prior, and we'll be taking questions throughout. And I'm joined today with David Muller with Becker. So David, thank you so much for joining us today. I'm going to let you introduce yourself and your firm, and then we'll dive into today's discussion.
Good morning, everybody. And Laura, thanks for Laura and Shauna for the great introduction and the invitation to attend today's webinar. Quick note for all of you out there. Again, thank you for joining us. My name is Dave Muller. I'm an attorney with Becker. I work out of the firm's Naples and Sarasota offices. I've been with the firm for 20 years and board certified in condominium and plan development law. And I'm well versed in the issues of budgets and reserves, and also well versed in how things are changing, and boy, are they changing. So it's a timely topic as a lot of you are heading into budget season.
Yes, or already approving budgets.
For sure.
All right. So with no further ado, let's get going, David.
Sounds good. So we're going to go for about an hour today. And there's a lot to cover. Laura and I were talking before preparing for the webinar, and we agreed this could be an hour presentation, and quite candidly, it could be an 8-hour presentation. So we're going to give you the 1-hour presentation. The goal today is to really focus in on what we consider to be the high points. The most important things that you need to consider heading into, and with your budgets, with things that are changing, particularly for condos and cooperatives that are 3 stories and higher. But there are still considerations for condos that are 1 and 2 stories, and as well as homeowners associations. So we're gonna address condos, co-ops, and HOAs throughout this presentation. So let's dive right in, and Laura, as always, as I get going, feel free to to dive in if there's any questions that come in or anything like that. So first things first, the board meeting to consider the budget, right, for condos and cooperatives. This is important, right? You must mail, deliver, or electronically transmit that budget to your members 14 days before the board meeting. Now, for some of you that maybe are newer to the boards, you'll hear the term budget meeting sometimes, and I know sometimes that can be confusing. What exactly is a budget meeting? There are 2 meetings. There are 2 types of meetings. There's board meetings and there's membership meetings, right? And there are the primary difference, of course, is a membership meeting is typically when the members are going to be taking action or voting on something. And so when you hear the term budget meeting, that's a board meeting, right, where the board is considering the proposed budget. It's an important meeting, right? I live in an HOA, and I eagerly await the notice. It's one of I don't tell my HOA, I don't represent them, thank God. But don't tell my HOA. A lot of times I open their mail and open their emails and give it about 5 seconds to peruse and don't do much with it. But I for sure open the envelope with the proposed budget, and I go right down to the bottom, as do most owners, to see what the percentage increase is going to be. And if it's anything over 3 or 5%, then I typically sit down and kind of go through it to try to figure out exactly what's happening. I'm assuming I'm not alone. A lot of owners are doing the same thing. And I know that a lot of boards very much are focused in on keeping that number as low as possible for the obvious reasons, right? I'm here to tell you, though, there are times where you may have to go over those lower numbers, and there are implications, of course. And one of the things we're going to talk about today is to try to help you explain to your owners why you may have to increase the regular assessments and all those nuances. But sticking to our agenda here and our PowerPoint, the first step is to properly notice your board meeting where the budget will be considered. And for condos and co-ops, that means the notice goes out 14 days in advance with a copy of the proposed budget. Now, you are not what I call married to that proposed budget. You still have some ability at the budget meeting to make some tweaks. Just use your common sense, of course. Don't get crazy. send out a proposed budget and then actually adopt one where, the regular assessments are double, as an example. That's something you don't want to do. But you're not 100% married to the numbers in the proposed budget. That's why it's called proposed. Now, let's talk big picture about what the budget is. The budget is an estimation of your expenses coming up in your fiscal year. That's what the budget is. The budget also accounts for reserves. And at its purest form, in terms of what the definition of reserves, it's things that may not be addressed necessarily within the upcoming fiscal year or each fiscal year. And in order to properly run your corporation and your community, you need to account for those things that maybe this big expense isn't coming up for 5 years, right? And so it would be a mistake to just ignore it for 4 budgets and then have a whopper of a regular assessment and a huge budget in year 5. So those, at its really purest form, that is what reserves are for. And there's a whole lot of law on reserves, and your budget has to show what the proposed reserves are. Now, sometimes we get questions, managers and lawyers, about budget workshops and things like that. A budget workshop is really it's kind of a precursor to the budget meeting where you want to flesh out some issues and talk some things through. If the budget workshop does include, a quorum of the board, and you're talking through things that, are related to what are the amounts going to be in the budget, you need to notice it like you would the budget meeting, right? In order to be in compliance with the law. So don't forget that important step that, if you're going to have this workshop, make sure you notice it. Now, there are times where in condo law and HOA law, where you can be a bit aggressive, right? You can push the envelope. This is not one of those times, right? You will invariably have some owners who fall into collections. Times have been pretty good for the past couple of years in terms of not a ton of foreclosure activity and things like that. But for those of us that were around in the dark times of 2008, 2009, those were very, very challenging times. And so what I'm getting at is, when you fall into foreclosure, and I know that's a whole nother webinar that we could do, when there's collection matters, it's my experience 75% of the time the defenses are procedural in nature as opposed to substantive. And what I mean by that is, if an owner is delinquent and they lawyer up, the lawyer is going to look to see, were any of the procedures that the association followed to adopt the budget or the special assessment, were any of those procedures not followed? And then that is what they'll focus on. So let's not give owners' lawyers any opportunity to make allegations. Let's follow to a T all of the procedures that are required. And that's what we're really trying to drive home today in this webinar, to teach you about all of those requirements.
Yeah, David, I've got a question. Karen's asked, is a quorum of the board required for a budget workshop session?
Well, so here's the thing. If there's no quorum of the board, now the short answer is there's nothing in the law that requires a budget workshop, right? So if there's no quorum of the board, then it's not a board meeting, right? But I think there's another section of the statutes that talk about if there's like a committee that's empowered to discuss the budget. So if it's like a finance committee or something like that, again, that's one of those questions you should chat with your lawyer about. But depending on what type of topics are going to be discussed by these committees that may not be considered, may not include a quorum of the board, it could trigger the 14 days. So if you're not sure, touch base with your lawyer to confirm. But the short answer to the question is, if there's no quorum of the board, there's no budget. I'm sorry, there's no board meeting.
No meeting. Yeah. No formal meeting notice needed.
Exactly. Right. No formal board meeting notice required, but it's possible there might be a requirement to notice a committee meeting. It depends. And I know people hate when lawyers answer questions that way.
I know. I've got one more question
Sure.
specifically to the I've got a person who's asked, if I meet with my board one by one and they give me approval on the proposed budget, is that acceptable?
Okay, I think the question is getting at the age-old question, what came first, the chicken or the egg, right? Because if we're talking about what's going to be in the proposed budget that's mailed out, right? If the question is, can I go, if there's a 5-person board and I am president and I go one by one with individual conversations with my fellow directors, is that okay to approve the budget? And of course, the answer to that is no. You have to have the budget meeting where owners have the right to attend and ask questions and all that. I don't think that's what the question was intended for. I think the question was for the proposed budget, what's going to be
Proposed
the
budget.
content.
Yeah,
Yeah.
they confirmed it is
They
proposed
confirmed
budget.
proposed budget. Yeah. So for proposed budget, there's no requirement to have the workshop, right? So if there's, one director that communicates in less than a quorum, in terms of the mail out that goes out, that could be okay. And again, I say could be because you always want to look at your bylaws to see if there's anything a little bit off or or unusual in your bylaws when it comes to this issue. But that might be an option in terms of getting the budget notice out with the proposed budget. Yeah.
Right.
The
We'll
board
continue
meeting
on.
notice out. Right.
Thank you. Yeah.
So let's address the 800-pound gorilla in the room. All right. This is for condos and co-ops that are 3 stories and taller. If you are not a condo or co-op that there's 3 stories or taller, this is some good information for you to know, but it doesn't apply to you. There's something in the law now called the Structural Integrity Reserve Study. And this was adopted in the law in 2022 following the Champagne Tower South tragedy, as an attempt by the legislature to address concerns, particularly about aging condominiums. And one of the things that they tried to do with this legislation is put procedures in place so that you know about the state of your building through the milestone inspection reporting. That's another webinar, but today we're focusing in on the other aspect of it, which is this requirement for a structural integrity reserve study. That's required. Most associations, the deadline is coming up, December 31st, 2024. I'm sure for those of you that are condos and co-ops 3 stories and taller, you're probably well aware of this and probably already have your report or have the company in line to get the report. It's an important thing to have done because the law lists out the components that are part of the structural integrity reserve study. And then here's where things get interesting. The law, in my opinion, could have been drafted more clearly. Okay, as my mother-in-law would say, there are improvement opportunities for this statute. Okay, the law says for any budget adopted on or after December 31st, 2024, for communities that have to have a SERS, the budget has to fully fund the SERS. Now, the key word there I said was on or after December 31st, 2024. Most of you all are probably on a calendar year, fiscal year, right? And so most of you are probably going to be adopting your budgets in November or early December, which means you're adopting your budget before December 31st, 2024. So what is this law saying? This law is saying the old law prior to all this change was if the board wanted to fully fund the reserves pursuant to the reserve study, the board had that option. They did not have to go to the owners at all. They could just say, you know what, we've got our reserve study. The contribution that is required, I'll use a hypothetical here, the contribution that's required for 2021 is the number we're going to use, and we're just going to plug it in the budget, and that's going to be that. But if, again, under my hypothetical, if it were November of 2020, talking old law here, and the board wasn't comfortable with the numbers included in the reserve study, and they wanted to partially fund the reserves or not fund them at all, the board alone did not have the authority to make that call. The board had to go to the membership. And the old law was you needed approval of a majority of those owners that voted at a meeting where a quorum was obtained, right? That's the old law. The laws change. Number one, that voting threshold is different now. It's a majority of everybody as opposed to a majority of those that vote. And then number two, you've got this CSRS and non-CSRS, right? What I'm getting at here with this date, my constant reference to December 31st, 2024, is if you're a condo that's required to have a CSRS, you look at the number in the report for the CSRS and the non-CSRS, and CSRS again is Structural Integrity Reserve Study, and non-CSRS is Non-Structural Integrity Reserve Study. As a quick note, you might be thinking, well, what are some of the things that might be included in a non-CSRS? Well, elevators are one, right? That's a huge expense, right? And those are, from the studies I've received, those are contained in the non-CSRS. So back to my example, if you get your CSRS and your non-CSRS and you're not happy with those numbers, it's just, you don't want to just plug it in your budget. You want to partially fund them or not fund them at all. You can have an owner vote for the CSRS and / or the non-CSRS. And this is your last opportunity to consider a vote for partial funding for both. A year from now, if the law does not change, more on that in a moment, if the law does not change, a year from now, you will have to fund the CSRS for your 2026 budget with using the number that's in the CSRS. You will not have the option to have this owner vote to partially fund it or not fund it at all. You will still, a year from now, have that option on the non-CSRS, okay? So that's an important thing for you all to be aware of. The legislature is saying for this big ticket stuff that is, roof and fire protection systems, and there's a whole list of like 10 items that make up components that have to be in the CSRS. For those components, the legislature is telling us this stuff is super important. There has to be funds available when it comes time to replace it. So we are now forcing you, Tallahassee is now forcing you to fully fund those components. But you've got one last bite at the apple, if you will, on the CSRS to take the vote this year, again, if the law doesn't change.
And I was talking to a board member yesterday about the cost, right? So on their reserve study, they had projected out that in 30 years to replace a roof over some coach homes, right? Which is, and they were one level, was going to be $1 million in 30 years. And their tile roofs, and I thought, holy smokes, like, is that just, I was going to reach out to some reserve specialists today to say, what are we looking at in the industry? And are associations required to fully fund based off that projection? And I mean, I know that we recommend our best practices to go ahead and get your reserve studies updated every 2 to 3 years to adjust for cost increase, decrease, whatever it may be with the market shows. What's your recommendation there?
Well, so the law, when it was first implemented, wasn't clear as far as who was licensed to do these CSRS, right? And now there is this like licensure through the Community Associations Institute. There's a way reserve study specialists can now have their license. So to your question, when you receive your CSRS, you should go through it with a fine-tooth comb, right? Because it's like anything else in life. I'm going to use the phrase garbage in, garbage out, probably not the best phrase to use, but you get the point, right? It is data points that the reserve study specialist is using to create this report. And there may be things that are off or not fully accurate, or there might be improvement opportunities in that report. So I would encourage you, if, like the example you gave, if there's something that the board thinks is off, pick up the phone and call the reserve study specialist and say, hey, listen, we have the following concerns. Is this right? Here's what we're kind of going off of, and see what they say, and see if they tweak their report, their CSRS accordingly. Now, this isn't us trying to put undue pressure on the reserve study specialist to get the numbers down. That's not what's going on. What's going on
just
is
accurate.
Accuracy. Because look, these reserve studies, they are the bedrock upon which the budget is based, right?
Right.
super important. Some of these dollar values can be very high. And
Mhm.
I've heard from a lot of communities, particularly communities where there's a lot of owners that are on fixed incomes, presidents are calling me up and saying, what do we do? Like, 25% of our community is not going to be able to pay these figures going forward. And it's a problem. I mean, that is why the legislature hopefully will act sooner rather than later to come up with something to help these situations, because there are competing interests. On one hand, we want buildings to be safe, right? We get that. We want them to be safe. At the same time, we don't want to drive out a good portion of the population of the state of Florida and have them, go move to the middle of Tennessee somewhere. We want to
Right.
keep them here. But how do we weigh these competing interests? And this is what the legislature is really struggling with.
Yeah. All right. There's lots of questions coming in, but we'll get to those. We may round those out at the end and let you get through your slides, David.
Gotcha. I think that's a good plan. We've got a lot to cover, and I'm going to try to hit the high points here.
Yep.
So we talked about the budget. It's you focus in on your income, how much money you need for your various operating expenses, and look, the one that just leaps off the page there on this PowerPoint, right, is insurance. I'm sure you all out there, you probably have some horror stories to tell about insurance, how expensive it's gotten, the percentage increase. It's probably the biggest line item in virtually all of your budgets. And sometimes you may not, like, I know a lot of associations struggle with, hey, our fiscal year's on the calendar year, and then we don't get notice from our agent until like the middle of March for what the premium's going to be, and that sucker's due April whatever. It's a very short window. And I've had a lot of panicked phone calls of, oh my God, we budgeted $700,000 for insurance. Last year, it was $600,000. We thought $100,000 increase would be sufficient, and it's $950,000. And our agent tells us that's the best we can do. Where do we come up with this $250K, right? And the budget's already been adopted. The short answer is there's only a certain number of ways to generate money. One of them is to amend the budget, special assessment, things like that. But insurance is a biggie. Do your best to get an estimate for what the insurance premium is going to be. But I feel for the agents, because I know they're pulling their hair out, because a lot of times they don't know, oftentimes until the short, just a few weeks, and from what they're telling me, before the new year comes due for the premium. So it is challenging. All of these hurricanes that are hitting is not helping matters. I read in the news yesterday, there's another hurricane out there, 40% chance of development. I can't even. I'm not going to mention the word hurricane again, because hopefully I won't mention it. I can't go there. But it's driving these insurance prices, and it's on top of all these other crises that we just mentioned. So it's a challenging time to live in a community association in Florida.
Yeah.
So I think we'll move on to some other considerations. Other topics.
You
this
went
one, yeah.
You went next slide.
Yeah, we'll do the next slide. That'll work. Thanks. Okay, budget planning, right? Proper common expenses, limited common elements, acceleration of assessments. That probably doesn't impact many of you. If you're a multi-condominium, you all are probably familiar with this. You'll need, each of the condominiums will need a budget, and there can be a budget within the budget, right, for multi-condominiums. And that's just because sometimes the condominiums are different number of units or different number of stories and things like that. So you've got to be up to speed on that. And for those of you in a multi-condo, I'm sure you know exactly what I'm talking about as far as budget planning. Multi-condos, and for those of you that may not be familiar, what is a multi-condo? There are associations where there's one corporate entity, right? Del Boca Vista, right, is the association, but there are one corporation, one board of directors, but then there might be 5 or so, under this hypothetical, condominiums that have separate declarations, that are governed by this one association. So they don't have 5 different boards and 5 different, associations. They have one association, one board, but they do have condominium specific documents and budgets and things like that. So some of the things to consider. Condominium statutory reserves. We touched on this a little bit. The old law, back to my hypothetical of 2020, the old law used to say, I say the old law. What I'm about to say is still the law. It's just for condos and co-ops that are 3 stories and higher, we now have this additional consideration, which is the structural integrity reserve study. So statutory reserve, when I hear that phrase, I look to the statutes, and the statutes say for condos, right? You must reserve for the roof, painting, paving, and any expense where there's deferred maintenance in excess of $10,000, right? That's those were the magic items that make up what I consider to be statutory reserves. So those are the things that you have to reserve for. And if you don't want to reserve for them pursuant to your reserve study, you then have to take that membership vote that we talked about previously. For condos and co-ops that have to have the CERS now, some of those components, like I mentioned, the roof, well, that's now caught up in part of the CERS. So hopefully you're not all confused with this. What's the bottom line here? The bottom line here is you do need to be focused in on your community and what the various expenses are. For example, limited common elements, right? There are condos out there that are what we call mixed condominiums, where a portion of the condominium contains residential units and maybe the first floor units are commercial, right? These are more common in downtown areas. You've got to look to see what the governing documents say about who pays for what. It is probably very common for a setup like I just mentioned, for the bylaws to specifically state, guess what? The first floor commercial unit owners are not required to contribute to funds related to the really sweet swimming pool on the 5th floor, right? Because they don't use it. So you do need to be cognizant of the type of community you're in. You need to pay attention to your bylaws, and you really need to make sure that your budget properly accounts for all of this, because the last thing you want to do is screw something up. And like an example I gave, open up the door for a commercial unit owner to maybe say, wait just 1 minute, I think I'm funding the really nice swimming pool on the 5th floor. Why am I doing that, right? You don't want that to happen. So you've got to keep all of those factors in your mind. I think we're probably ready for the next slide. Yeah. Okay, adopting the budget, right? So the board versus the members. We talked a little bit about that. The board is responsible to adopt the budget, and if they don't want to fully fund the reserves, they have to go to the members. Now, there is the chance that your bylaws may say something about member approval of budgets, right? In my experience, that's not super common, but it's out there. So again, read your bylaws, particularly if they're old and outdated. Read your bylaws because you might find some interesting stuff in there. But for most communities, the board adopts the budget. Now, there's this reference to the 115% rule and this alternative budget, right? What that's all about is if there is a budget that is proposed that exceeds, they use 115% in the statute, but it really is if there's a greater than 15% increase in the budget, which means a greater than 15% increase in the regular assessments, there is a mechanism where a certain percentage of the owners can sign a petition and put forth an alternative budget. And then eventually there's a membership vote, and if the proper percentage is obtained, then the alternative budget is implemented. Now, I've been with Becker 20 years. The number of times I've seen a community pursue this 115% rule and pull it off is goose egg, 0. I've never seen it, but it has happened. It's happened with some of my colleagues. Something for you to be aware of. This rule, this statute is very much misunderstood. This does not mean the statute says if you're going to increase your budget by 15%, you need membership approval. That's not what it says. I would encourage you to read the statute. By the way, for condos anyway, the section that covers a lot of what we're talking about, 718.112, okay? 718.112. When I get a question from a client, from a condo client, and I have to consult the statutes, I don't know, 30, 40% of the time, I'm heading right to 718.112. There's a whole lot to it, and that's a great resource for anybody to pull up that statute, and you'll see a lot of what we covered here today is mentioned in there. Other important things to keep in mind, the affidavit of mailing. We talked about this mailing that has to happen. You have to have, the person who did the mailing has to sign an affidavit saying that they did it, right? And if you don't have that, it's a problem. We mentioned earlier in the webinar about what happens if an owner doesn't pay and then lawyers up and tries to come up with some reason as to why they don't have to pay the assessment. We also talked about procedural steps. Make sure that affidavit of mailing is completed and put in the official records, because it's important. If we don't have that, we've got a procedural flaw, and we've opened the door for an owner to allege that the budget wasn't adopted properly. And sometimes there's turnover, right, with boards and management, and God forbid, sometimes there's turnover with lawyers too. You know, with this turnover that happens, I mean, there have been multiple times where I've had conversations with clients and I've said, okay, I'm going to need that affidavit of mailing for this meeting that took place in 2022. And they say, what do you need? They're like, well, we're a whole new board, Dave. We've got a whole new management company. You know, you weren't the lawyer back then. Everything they did back then was they didn't know what they were doing. And I'm like, well, that's a problem if we don't have some of these records. So know that that's an important document that has to be completed and executed.
Yeah.
And yeah, go ahead, Laura. You had a question?
You're good. Yeah, we've got questions, but I promise you guys we'll get to you at the end.
Gotcha. And then we have meeting minutes. Okay, the board meeting minutes are important. If there's any type of special membership meeting where there's a vote on funding of reserves, you know, really pay attention, be mindful when you're drafting these minutes. Now, I could do a 2-hour webinar on best practices with meeting minutes. I'm not going to do that. I am going to give you this little snippet of information, and that is, in my mind, meeting minutes are not a recitation of everything that took place at a meeting. The poor secretary who's having to, you know, prepare the draft of the meeting minutes, or the manager, whoever's taken that step, they are not having to dust off their court reporter skills and get everything in there. That's not what the minutes are. The minutes are to confirm business conducted and actions taken, right? So just keep that in mind, that that's critical when it comes to the minutes. If John Doe in Unit 101 goes on for 35 minutes, which he's not allowed to, by the way, you can cut him short of that. You don't have to include 3 pages in the minutes on everything that John Doe said was wrong with the condo and the board. You just don't have to do it. So,
yeah.
All right. Yeah. So moving on, reserve requirements. So some terms so that you're aware. I know we have some board members who are veterans, you know, of being on the board, have done it for 10+ years. And we may have some newbies who just joined the board a couple of weeks ago. First things first, I must say, whoever's watching this webinar and you're on your board, you have to raise your right hand and swear that you won't resign for at least 72 hours from the completion of this webinar, right? So I know you all are doing that out there as you're watching this. This is a lot to take in. If you're brand new to the board, don't be scared off by all these requirements. You'll get the hang of it. But here are some things for you to be aware of. So, you know, terminology and big ticket items, right? So first things first, straight line, sometimes called component reserve calculations versus cash flow or pooled reserves. Straight line component reserves are basically, they're rigid, okay? For example, with the roof, if the roof is going to cost $1 million to replace in 10 years, and you have, as of today, $600,000 in your roof reserve, right? That means you've got to fund 400,000 over the next 4 years. If I'm remembering my hypothetical here, straight line component is, if my math is right, $40,000 contribution for well, I think my math's off here, Laura. But anyway,
Yeah.
math's not my strong suit. You see what I'm getting at, though? Whatever has to be contributed per year, so that when you get to that 10-year marker where the roof has to be replaced, you have properly funded. You have 600,000 today. You need 400,000 for in 10 years when the roof has to be replaced. You've got to make sure that money is there, and the money is directly funneled into the quote unquote roof reserve. And that money can only be used for the roof reserve, right? It can't be used for alternative purposes. With the exception, under the current law, you can take a vote of the members to use the roof reserve for an alternative purpose. But know that roofs are a part of CSRS, right? So you can't, once the funding mechanism I talked about earlier goes into place, you can't use CSRS for an alternative purpose, right? Let's not get complicated with these screens on CSRS and non-CSRS. Just know that if you're one of those communities where you've got CSRS and non-CSRS, there's some caveats to what I'm going to say here. But straight line is, the best example I can give is straight line is like having a bunch of separate envelopes, and one envelope that says roof. And every year with your budget, you're stuffing that envelope with whatever the contribution amount is for the roof. And then you set that aside, and then there's another envelope for painting. You're stuffing the money in that separate envelope for the painting and pursuant to the funding mechanism that's provided to you in the reserve study. That's what straight line funding is. Cash flow, sometimes called pooled reserves, is a little bit different, right? There's greater flexibility. So going back to my example, pooled reserves is when you take all of those separate envelopes and you pour them in to one big envelope, right? So it's all of the money, all the reserves are floating around in the pooled reserves. Pooled reserves is popular for two primary reasons. It's popular because it results in more consistent funding of the reserves year in and year out. So you don't have the kind of big dips and dives with reserve funding that you often find with straight line. It's also popular because it gives boards more flexibility, right? If you have pooled reserves, under my example where I screwed up all the math, let's say when you get to that 10th year and you did what you're supposed to do, you reserved according to your reserve study, and there is $1 million, but then guess what? The roofer says, oh, it's actually, $1,050,000, right? With pooled reserves, you have the opportunity to take out, to dip into the pool to cover that extra 50,000. Now, then you may be thinking, well, wait a minute. If we dipped into our pool to get the extra 50,000, that's going to have consequences for other of the components and the reserves that are floating around in our big pool. And yeah, you're right. That is one of the downsides to pooled reserves. It comes with the more consistent funding. It gives you the greater flexibility, but it has the potential for you to not have the sufficient funds available when you need them to cover all these expenses. To that point, piggybacking on what Laura had said earlier, guess what? If a best practice is update your reserve study periodically, okay? And I think Laurie mentioned Castle recommends every 2 to 3 years. If you've got pooled reserves and you're updating your reserve study, if my hypothetical with the bad math plays out, it's going to be caught and incorporated into the new reserve study, because that new reserve study is going to realize, oh, things cost a little bit more than we thought they were. So now we have to make up for it. And the numbers are going to be a little bit more than they would have otherwise been. It's an effort to recalibrate things. So that's the difference between straight line and pooled reserves. Now, if you want to convert from straight line to pooled reserves, it does require a vote of the owners, right? Then the threshold is a majority of all the owners. Again, this is for condos and co-ops, right? That's the requirement. And you may be thinking, well, why is that? Well, the reason that's the way it is going back to my example with the roof reserve. That money, when it was straight line, could only be touched for the roof. But then when you put it in the big envelope and it can be used for other stuff, guess what? That might mean it's a potential alternative use. So that's why you have to take the membership vote to convert from straight line to pooled. But pooled has a lot of advantages. It does have some disadvantages, which we covered. Use of reserve funds for an alternative purpose, we touched on that. The law is that you can use reserve funds for an alternative purpose if you get the advanced membership approval of a majority of all the owners. And just, again, with the caveat being for CSRS, there's the additional requirements of the law that CSRS can't be touched. So just know this is the law, but with the caveat of the CSRS. And then transferring money between the reserve accounts. You know, I get this question a lot from clients. They'll say, you know, going back to my hypothetical over that condo that received a notice of their insurance premium went up, right? I'll have a lot of, I say a lot, I've had calls in the past where that fact pattern, you know, we were talking about March and April, right? That fact pattern plays out. And then the board member says to me in November, hey, Dave, yeah, we had to borrow from our reserves to cover the extra $100,000 in insurance premium, but we're going to pay it back. But we had to borrow from the reserves. Well, you know, if you are going to borrow from your reserves, you have to take a vote of the members because you are using reserve funds for an alternative purpose, right? So just know that even if you promise to pay it back, it's still technically a use of reserve for an alternative purpose and likely requires the membership vote.
There was a question asked on that specifically. Can you borrow from reserves that will be replaced when cash flows increase for insurance premiums versus taking a loan due to timing of the premium due?
Yeah, so I think with that question, it kind of goes back to for your CSRS and your non-CSRS and your reserve study in general, it is very rare to have, well, I say very rare. It's not typical to have like an insurance reserve or anything like that, right? So I think if I'm understanding the question correctly, you can't tap into reserves for insurance premiums without taking that membership vote. Did I understand that question correctly?
Yeah.
Yeah. Okay.
Yeah. Using reserves for anything but reserves. Yeah.
Exactly.
What?
Interest, you know, basically the interest accrues. It's there. There's some regulations as far as what to do with the interest, what you can do with it. Most communities, they just accrue interest on the reserves, and you know the reserves grow accordingly, and they don't try to use it for any alternative purpose. It's just one of the things that goes along with getting the interest. And then, of course, CSRS and non-CSRS, you know, we've touched on that quite a bit. Yeah, so I think we've covered that. I'm not sure how many. I know we've got about 15 minutes or so left. Laura, how many more slides do we have? Just a couple, right?
Yeah, I think we're about a little over halfway through. Yeah.
Okay. All right. We'll try to kind of jet through these so we can take some questions.
Perfect.
A lot of this we've talked about. Waiver of reserves, condos and cooperatives, you know, full waiver, partial waiver. Just remember, there are requirements in the statute. If you're going to take a vote on the waiver of reserve funding, there is certain big, bold language that has to be included in the proxy. So it's always a good idea, if you're planning on conducting a membership vote, just run it by your attorney. Just say, hey, listen, we've got, you know, and And as a little side note, if you want to keep your lawyer happy, don't wait till 15 days before the meeting to run the notice package by them. And I know that's what everyone's goal is, to keep their lawyer happy, right? Happy lawyer, happy life now. Yeah, have your lawyer review this to make sure that everything's done on the up and up. Again, because we don't want to open up procedural arguments. The voting threshold, as I mentioned, it changed. It changed over time. I think that it changed in, I believe it was the spring of 2023, if I recall correctly, that the voting threshold for these votes we've been talking about, it used to be a majority of those that voted at a meeting where a quorum was obtained. Now it's a majority of everybody. So in our classic example of 100 units, it used to be if a quorum was a majority, you'd have to get to 51 voting in person or via proxy, and then it's a majority of the 51. Well, now you got to get to 51 that say yes, right? If you have 70 votes, and here I go again with more math, and 21 of them are no's, guess what? You didn't get a majority, and it failed. So that's something else. And then sirs and non-sirs, we should, it's too early. If this were an afternoon or late afternoon webinar, we could play the drinking game. And every time I say sirs, everybody would have to take a drink, but no, I digress. So since it's 11 o'clock, don't do that. Wait a little bit, please. Okay, for our HOA friends, we haven't forgot about you. Thanks for hanging with us. The law is quite different for HOA reserves, okay? So it's much looser in terms of the regulations. What I refer to as a statutory reserve for HOAs, that is a reserve that has been voted into place by the members, right? Let's say, for example, like you've got a big clubhouse and it's smart to reserve for replacement of certain components within the clubhouse, like the roof. Mm-hmm. Check to make sure that, I'm sure you've got a reserve study for your big clubhouse. You'll need to check to make sure whether or not it's a statutory reserve, meaning one that has to be funded. When I say statutory reserves for HOAs, what I mean by that is a reserve that must be funded according to the schedule contained in that reserve study. And if the board doesn't want to fund pursuant to that schedule, membership approval is required, okay? Now, in my experience, for a lot of HOAs, a lot of the reserves are not what are considered statutory. So the board has a lot of discretion in terms of reserve funding. So just know the rules are quite different, and the number of pages in the Condominium Act devoted to reserves as compared to the number of pages in the Homeowners Association Act pertaining to reserves, it's kind of shocking how the disparity. I say shocking, maybe not as shocking when you consider condos and co-ops, everybody's living together, and HOAs, we're typically not living together right on top of each other, but sometimes we are. Yeah. So just know the rules are a little bit different, but some of the concepts we talked about in terms of reserve study, funding, maybe needing a membership vote, a lot of those concepts could be applicable in an HOA. So I think we'll move on. We've got a few more slides to get through, and then we'll take some questions. So collection of assessments. I mentioned this earlier. You've got to show that you properly adopted your budget, the regular assessments. If you adopted a special assessment, you've got to prove that you properly adopted the special assessment. All of that is critical. And what we at Becker, what we ask our clients to do, if you've got a delinquent account, if an owner has a delinquency, and you send us the updated ledger to help you collect on those, collect that money, and plus the interest and, late fees and attorney fees and all that other good stuff, it is very helpful for us, and we need it. Mm-hmm. For you to send us the affidavit of mailing, if it's a regular assessment that wasn't paid, it's helpful. Send us the affidavit of mailing, send us the board meeting minutes. So we've got that ready to go. So if an owner does lawyer up and make some of these procedural arguments, Becker's already ready to go with the paperwork. We don't have to ask you or anything like that. And it's also helpful for us because sometimes the client, this is rare, and this is never a Castle client, by the way, but sometimes we say, okay, you want us to pursue collections, show us the meeting minutes and the affidavit of mailing. And they're like, well, I don't know. I don't think I'm not sure we've got that. Well, if you don't have that, we've got bigger problems and we've got to address that problem before we pursue collections. So just know there's case law out there. Again, this is another interesting topic for a webinar, collections foreclosure. There's case law that says, if John Doe didn't pay his regular assessment on time, John Doe cannot say, because the swimming pool is dirty and the water was green for 4 days, so I'm going to punish my community for not having a pristine, crystal clean pool. I'm going to punish my community for that dirty pool for a couple of days. Case law says that doesn't fly. John Doe still has to pay his assessments. If he feels the community hasn't been properly maintained, that's a separate action. And you can't just say, I'm not paying the regular assessments as punishment. So as you might imagine, there's a ton of case law on that particular issue. Just be ready for that if anybody decides to get cute in your community and tries to play the pool is dirty for 3 days card, because that doesn't fly.
Yeah, or that they don't use it.
Or they don't use it. Yeah, that's another example. Yeah. Okay, just a couple of resources here for the firm. We've got a blog where we're constantly blogging and sending out information. So there's a way you can sign up by going to this website. CALL is the Community Association Leadership Lobby. That is the lobby arm of Becker, where we're constantly monitoring legislation and public policy in Tallahassee and DC. So there's good information there. We've got our Becker's 2024 legislative guide, where some of the things we talked about today, we take a deeper dive into. And then, of course, there's everybody's favorite website, or I should say second favorite website, Castle being the favorite website, followed very closely by Becker lawyers. So a couple of resources there for you.
All right, great. And everybody, again, Sean and I will be sending out an attachment of this presentation with a follow-up email. All right, so I want to try and get through as many questions as we can here. So I'm going to start lobbing some questions your way, David, if you're okay.
Sure.
This goes back, or this is, I'm going to start from the first ones I received and just go down the list, everybody. So who's ultimately responsible for the annual budget? I believe it is the treasurer reporting to the board. The property manager says they are. I'll tell you from the property management standpoint, we have processes in place that our managers help draft the first rough draft of your budget, meaning they're going to look at your June financials in July, and they're going to start plugging in different calculations, reaching out to your vendors to see and looking at your contracts to see what the increases are going to be for the following year. And as they plug in that data, then they're going to present it and talk to the treasurer, the finance committee chair, and they start working hand in hand. So ultimately in Castle, the property manager is responsible for getting the initial draft, and then you work with whomever's designated from the board, whether that's the treasurer, president, or the finance committee, to then work with, everybody being happy with the official draft that's going to go out to the rest of the board members for review. And then David, I'll let you chime in on your side.
I echo everything Laura just said. On top of that, everybody's responsible ultimately, right? Because,
Right.
If you're a director, you've got a fiduciary obligation to your corporation. And if the budget wasn't adopted properly or some of these steps were missed, somebody could allege a breach of fiduciary duty. And then, of course, managers, they have licenses and they're licensed and they have obligations as well. So it's a team effort, and the buck stops with everybody, all board members and management, to follow all of these statutes and get it done. Right.
Yep. Agreed. 100%. All right. Bill asked, are there guides on how to distribute existing reserve funds? Can we move all to CSRS? So maybe. Yeah.
So it can be a complicated answer to that question. Let me, again, I know we've just got a couple minutes. We're going to try and get through as many questions as possible. The short answer is your reserve study specialist lives, eats, and breathes this stuff all day, every day, right? So have that discussion with them. But know this, if you're a condo that has to have a CSRS, and you're taking your current pool and you want to make all of that shifted over as the starting point for SERS, knowing you also have to fund non-SERS, but maybe you make your non-SERS starting point at 0. Well, guess what? That's going to require, to do that, will require a vote of the members, right? Because think about it, our pool includes things like elevators. You got elevators, right? It includes elevators in the pool. And if your funds for the replacement and repair of elevators, and if you're going to stick all of that in SERS, guess what? Elevators, at least the ones I've seen, they don't fall under SERS. It's under non-SERS. So short answer is have that discussion with your reserve study specialist, go through your options. And if you want to just put everything as the starting point for SERS, it very well could require membership approval because you're using some of those reserve funds for an alternative purpose.
All right. Thank you. Let's see. We've got Brian has asked on the HOA side, if we deviate from a reserve study and decide to use a more aggressive interest rate or a lower suggested inflation rate, what are our risks? And do we have to document what we are doing and why?
Short answer is there is some flexibility in terms of how you're going to tackle your reserve study, right? For those of you that have received the reserve studies and the SERS and all that, there's concepts called baseline funding, and then there's threshold funding. And again, we don't have time to get into all of this, but what I do want to answer the question as far as, and say this, there are options in terms of exactly what your game plan is, right? And your reserve study specialist will be able to present those options to you so that it's something you're more comfortable with. You may want to you may say to the reserve study specialist and the lawyer, we want to comply with the law, but we don't want to put more than $1 in these reserve accounts, then we absolutely have to because we're getting hammered on things like insurance and other things. Okay, if that's the marching orders, your reserve study specialist, and if there's any questions for the lawyer, they can help you accomplish that objective. Other communities might say, we're a little bit concerned about, if we're using pooled reserves, there may be a scenario where we don't have enough funds available. There might be some options in terms of how the reserve study is presented and eventually approved by the board, which brings up a very important topic I haven't hit on yet. Can you pool SERS or not?
I've got a few questions on that.
Yeah, the law is not crystal clear on that. Becker's interpretation is that our understanding of the statute and what the Division of Condominiums has put forth, and with I think every reserve study specialist we've talked to, our position is you can pool SERS, but you cannot pool SERS and non-SERS together. You need to have separate pools if that's your game plan, right? If you're gonna go pooling, you have to have separate SERS and non-SERS. And good thing we weren't playing that drinking game because I would have just killed somebody with the number of times I said SERS. And I know we've probably just got time for a few more questions, so we'll try to get to them. We appreciate everyone's patience. We an hour webinar, we try our best to get through as much as possible.
Yes. Let's see. I've got Jenny asked, we are 2 stories condominium. Is our reserve requirement 10% of the budget?
Fact specific, it depends, right?
Okay, so it would depend on their documents.
And really depends on their building, how old it is, what the reserve study says. It could be less than 10%. It might be a lot more than 10%. It just depends. Yeah.
So for HOA purpose budget mail out, is a 14-day notice needed?
I'd have to double check on that in 720. I don't believe the law is the same for HOAs as condos on that point. I'd have to double check on that though. Yeah.
I'm trying to, let's see. Bob has a statement really going back to the reserves and shortfall insurance premiums. We vote every year at a membership annual meeting to allow board to borrow from general reserves to cover shortfall of insurance premiums. Board would then follow up with an assessment to pay back the general reserves.
Okay.
So that's something that they do.
So Bobby, that the key there is a membership vote to do that, right? And then, to pay it back. So Bob, sounds like the way you're handling that is in line with the law, with the caveat being, Bob, I don't know if your community is 3 stories or taller. Just know that the SERS part of the things could complicate that, meaning, going forward, can't do that for the SERS, but you probably, hopefully have a healthy non-SERS in terms of the amount of money in there, and you might be able to use it for that purpose. But the key there is you were taking the membership vote, which was critical. Yep.
All right, I'm gonna do 2 more questions. If we didn't get to your question, please email us at info@castlegroup.com, and Sean and I will circle back with you to see if we can help. One other question, so can the mailing for the budget meeting be electronic?
Right. So the short answer on that is the law does allow for electronic notice of meetings, right? But the owner has to consent. They have to provide their consent to receive notices that way. So you can't force somebody to receive notices and the proposed budget that way, but you can certainly give them the option to receive it that way, right?
All right, I'm going to do a last general question here. Ralph asked, must the affidavit of meeting notice mailing by the secretary to be notarized, or can it just be a document solely signed by the secretary?
Notarized. Yep.
All right, that was a good, everybody can take that one in. Again, lots of good questions that came in, guys. I'm sorry we couldn't get to everybody, but out of respect for David's time, we're gonna wrap things up. Again, this webinar will be available at our website at www.castlegroup.com /webinar. So you'll be able to watch this and share it with anybody you would like, and then we will be emailing out the presentation. So David, on that note, I want to thank you for your time today, your knowledge, and great discussion.
Thank you for the invitation, as always. I appreciate it, and thanks for everybody for participating. Thanks for all your hard work for your communities. You're doing great work. So don't let them get you down. This is the Dave Muller and Laura pat on the back. You're doing a great job, and
a thankless job.
We know you're doing a great job because you're taking time to learn about how to do things properly, and for that you should be commended.
Yeah, I agree. Wonderful. That was a great closing. All right. Thank you, everybody. Thank you, David.
Thanks so much. Thank you.